Morning, everybody. It's the 3rd of March. We are Signal Centre talking bull. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
You all right today?
Tippity top, thank you very much.
Excellent. Okay, latest headlines then. Russia continues to increase pressure on Ukraine. The Ukraine headlines and global ramifications have continued to dominate markets during the past 24 hours. Local offices have confirmed that the city of Kherson is under Russian control. Other cities remain in Ukraine hands for now, but there have been further attacks on main cities with Russian forces looking to encircle and cut them off. In terms of what ramifications we're seeing elsewhere, oil prices surged to 9-year highs yesterday, and global equities were able to recover some ground, although the underlying mood remains extremely cautious. Oil prices have been the key focus, with a fresh surge on the fears that Russian supplies will be disrupted, while US President Biden has pledged to look for ways to stop importing Russian crude. Fed Chair Powell spoke yesterday. He's backing the 0.25% rate increase at the next meeting. In a prepared testimony to the House Financial Services Committee, the Federal Reserve Chairman stated that he expects it will be appropriate to raise interest rates this month, with the need to move away from highly stimulative monetary policy settings. We did see the the Bank of Canada move yesterday. They hiked rates to 0.5%, increasing them by a quarter of a percent yesterday, following the latest policy decision, which was in line with what the market expected. And we also saw that the Eurozone inflation number was at a record high yesterday. The Eurozone CPI inflation increased more than expected to a record of 5.8% from 5.1%. That's despite further increase in inflation. Despite the further increase in inflations, markets continue to lower the ECB rate expectations. So, still expecting them not to take any action when they meet later this month. Okay, that's it from the news headlines. Let's have a look at some charts. Steve, all happening in oil yesterday. Is that where you're starting, or is there something else taking your interest today?
No, I could start in oil, mate. Yeah, it's looking pretty punchy, as we sort of said yesterday, really. Let's take a look at the weekly chart, just see how punchy it is, Joe. Yeah, we can see sort of like at one point this week, you could have bought oil at $94. It's trading at $113 right now, and it has been up to $114.50. It's ran into this resistance that we picked up yesterday in the charts from September 2013, and also there's from May 2011 we got 115.63 above there. Obviously the all-time highs close to $150. So really you'd expect to see some sort of slowdown and some sort of I don't know, small sort of like posting of small short, sort of like shorts, just looking for that resistance to hold, at these like heady heights. So, but there's no sign of it as yet. Looking at the hourly chart will give us a little bit more indication. You can see even as far as the last hour, we posted them highs. So a little bit of a pullback now, but the trend is definitely up. You can't go against this trend really yet. You'd really need to look for some sort of slowdown. I suppose what we could do is bring up a stochastic of some sort. If we look at maybe MACD's one of my favorites to. Where are you, MACD? Where are you, MACD? Where are you, MACD? Have I gone blind? I might have gone blind, Joe.
Is it in your favourites? I can't see it.
Yeah, I mean,
Just
well, it
search
is.
it. Moving average, convergence, divergence.
There we
No,
go.
no divergence there.
No, just like sort of like hang on to your hats.
What about on the longer term chart, Steve? Anything happening on the divergence front?
No,
No.
don't even go there. On the hourly chart, you can see, some sort of divergence. You look like you're going to get another little crossover here, but again, very short term. Support obviously will be back down at a couple of levels. $100 being the main psychological support now. On the Brent side of things, that seems to have the gap between Brent and WTI has, well, I mean, it looks to have widened, but it's like now $3, but it's pulled back a little bit because WTI is up 2.94% on the day. Brent's up 2.4% on the day. So, but it's $3 the differential there. So that's widened out. Obviously, a little bit more premium going into Brent because it's over this side, closer to the conflict, really. So yeah, not really sort of like advise you to sort of like do really anything in there. It's the volatility. Let's let the volatility die down and see what we're left with. Gold also continuing the move higher. The strength we're seeing in there, we were sort of like quite nicely above this resistance level that we had from back in May 2021, $1,916, and looking pretty strong still. 1975 we've been up to around about that level. The next level we're targeting is the all-time highs at $2,075. So we are continuing to break out away from this channel, and this double top formation, double bottom formation has a measured move target of $2,150. So that's the way we're heading in gold. On a short-term basis, let's dive down to the hourly chart. We've had a little bit of a pullback. We've got Ichimoku cloud support here, really, but $1,915 is a level to watch. Any break down below there on the downside could open up a deeper correction to around about the 1880 level. So we're talking about quite wide levels now, just because of the volatility in the markets. Let's take a look at cryptocurrency. Bitcoin seems to be doing its best to push higher. On the daily chart, we can see we've had a couple of decent days. Yesterday was a bit of an indecisive day as we approached this resistance at 45,770, stalled in front of there and reversed slightly on the back foot this morning. Really, we got support coming in at 42,800. A break below there could open up the downside a little bit. And maybe we'd need a bit of a, I mean, we got quite a deep Ichimoku cloud, so quite decent support here. But I think we'd need to really see a break of maybe the 41,500 level before we could get excited about some downside. So while we're up here, it does look a bit like a rounding top formation. So decent sort of sellers coming in, and yeah, it's sort of like it's bucking the trend as far as Steve O'Hare is concerned on the crypto side of things. I'm always a bit of a bear when it comes to that. Indices as well, just sort of still don't get it, Joe. I think with what's going on in the world.
Well, that's being propped up by oil, isn't it?
FTSE. Yeah, the FTSE does have that oil influence in it. So yeah, but it's the rest of the indices that are sort of I'm scratching my head with. Let's take a look at some levels in FTSE to watch. We can see on the daily chart we had this bullish engulfing candle yesterday, engulfed the previous two days closes. So looking pretty smart at the moment, and good potential for the upside because of the influence of both banks and obviously the commodity focus on oil as well. DAX is the one under a bit of pressure. I suppose I'm sort of like more scratching my head with the US in equities. Over the last couple of hours, we've seen DAX reverse from this cloud resistance, a little bit of a lower high here, and we've broken the support we had at 13,940, trading at 13,900. So we do have support down at 13,715. It's not far away really. So DAX potentially looks like the one that could be under a bit more pressure this morning. I can't see anything from the Russia-Ukraine situation which could pacify the European indices at the moment, except FTSE. Obviously, it's a law unto itself. On the one that was interesting me was Nasdaq. I've been looking at this a couple of days. I tried to sell it yesterday on my gun to head challenge, and that failed. Got stopped out. Got stopped out on that. But we do have this resistance here up at the 14,300 to 14,350 level, and we seem to be stalling here as well. This is only the hourly chart, so it's a short-term chart. However, if you remember, I don't know which chart it was on, we've got this, I'll show you on the 4-hour chart because this is where I had the buy the break trade idea from the other day. It's an inverse head and shoulders, the neckline coming in around about that 14,300 level, a break above there, and we could see it extend higher. But I just really sort of don't get it. The S&P's similar sort of formation, inverse head and shoulders. We've got the clear resistance coming in at 4,400. A break above there, we should see an extension higher. But you know, all my senses are telling me it's a sort of dead cat bounce. We've got much more to see on the downside in these indices, but it just doesn't seem to be plain ball. China, we've got to really keep an eye on this level. It's becoming more and more important at 14,500. There's just this sort of like, I suppose, with Russia and China being quite closely tied, I think there's a bit to play out here. Whether the sort of world looks to China and thinks we can put a bit of pressure on China, then China looks at Taiwan and thinks that looks interesting, and then all hell breaks loose. I don't know, but at the moment, yeah, I'm just looking for this sort of like this break to the downside. But the volatility just seems to shake everyone out of this sort of like this negative outlook. Over to you, Joe.
Okay, lovely. Thank you, Steve. Okay, FX. So dollar index yesterday, quite an interesting session. It posted new highs at one point. So breaking through that 61.8% Fibonacci retracement level that we've been mentioning at 67.72, but then reversed very sharply to close ever so slightly lower on the session. We've actually gapped higher today. So overall, while it remains in this bullish channel, it still looks as though higher prices are possible, but maybe a little bit of a warning sign yesterday posted with that sharp reversal to post a shooting star candle. Looking at some of the other currencies taking my interest today, the Aussie remains stubbornly high, even though you would have thought, given that that's got sort of riskier connotations to it, it seems to be kept higher due to the higher prices that we're seeing in commodities at the minute. So it's moving higher at the same time as the safe haven currencies are moving higher, which is a little bit strange. So we've got Aussie CAD into a really big resistance level here, a downtrend resistance. As you can see, there is a big sequence here of lower highs and lower lows. So wondering whether or not this is kind of prime sort of region to consider a short trade. Certainly from a risk reward perspective, you know, you're selling into this resistance and you're targeting potentially lower lows. That could be an interesting one to consider. Looking at some of the others though, Aussie yen broken up through resistance here, a horizontal resistance at 84.30. Now looks set to go and challenge these previous highs up here at 85.80-ish. Aussie US dollar is bang into some resistance zones here. We've got a 73.14 level and also a 61.8% fib level just above that at 73.30. So I'm not sure if we're going to complete a double bottom here or whether or not this is going to be strong enough resistance that we're going to see prices move lower. So well, certainly worthwhile keeping an eye on for now. I don't know if it's got the impetus to continue moving higher or whether or not this is representing a pretty good opportunity to consider either offloading longs or getting short. Going back to some of the more traditional currencies that everybody loves, let's look at Euro US dollar. That made new lows yesterday, pretty much tick to the tick hit our measured move target at this head and shoulders top. So would maybe say that that move is now completed. And then we saw a pretty sharp reversal posting an impressive hammer looking candle on the daily chart, as you can see there. But we are moving lower again today, down by 0.25%. So we may see another retest of these lows that we posted yesterday. And if we go below those levels, then it looks pretty certain that we'll continue to see lower prices. I haven't got it on the chart, but I know there is a 78.6% fib level around here as well, which may be worthwhile mentioning because that could attract some interest. Yeah, that blue line there, as you can see, just below the measured move target. We've got a couple of highs here as well, which sort of support that as being support. So we've got that at 110.01, so pretty much 110. 0.000, nice big round number to target on that. So yeah, pressure still remains on the downside there. Looking at cable, choppy old few sessions on this really. As you can see, really large candles forming. So we saw a big impulsive move higher here on the 28th. Pretty much gave up all of that the following day, and then the next day we've pretty much made it all back. So it's really is very choppy indeed. It continues to find support around this region, around 132.70 to 132.86. So not really sure what to think about that at the minute. Looks pretty difficult trading conditions, if I'm totally honest, going by what we're seeing on the daily chart and the sizes of those ranges that we are seeing play out. Looking at euro, finally, that continues to get pretty smoked, really. I mean, that's a savage move lower. Only a couple of bits of green in there, but this is potential for 12 consecutive down days on euro versus the Aussie dollar, slicing through these support levels like they don't even exist. So looks as though that is very much set to remain under pressure. And I hope there aren't many people out there trying to call the bottom on this, because typically in the retail space for FX and other markets, when there is a big move in one direction, that tends to be when you try and get the bottom and the top callers come in and try and make a few quid. But be careful if you're doing that in this market in particular. Euro CAD, similar situation. Continued to move lower, having stalled at resistance at 146.05. Sliced through this latest level of support at 141.00 and no signs of slowing. Euro Swiss, we are at a support level here, which go all the way back to the left hand side. The last time we were here was 2015, so pretty significant levels, but no sign of that slowing at all either, although we did post a bit of a doji yesterday with this level from 2015 holding as support. And euro sterling, finally, that is at lowest prices that we've seen since 2019, 82.75. So euro really is under pressure at the minute and not looking very good at all against anything, to be totally honest. So be careful if you're planning any trades on anything linked to euro at the minute. That's it from me, Steve.
Nice one, Joe.
So let's have a look at the gun to the head trades from yesterday, and probably not going to spend too much time on that, to be totally honest, because we both tried to sell indices yesterday. I went short of the DAX for the second consecutive day, having had a decent go of it on the 1st of March. I gave some back yesterday, unfortunately, lost 1R. And similar situation for you, Steve, on NASDAQ. You made an R and then lost an R. So back to square one, it feels, on these indices. We really are getting a bit of a runaround on them at the minute.
Yeah, very, very tricky. Just the volatility just easily takes an intraday trade out. That's the problem.
Yeah.
So yeah, back to the drawing board, Joe. I'm
So what do you
sort of a
fancy
little.
today?
I don't really fancy it. Can I just like pass, or is there
Yeah,
a
can we
gun
have
to
a
the
day
head?
off? There is a gun to your head, unfortunately.
Yeah, I mean, everything for me looks like an ideal place to fade, but I
Yeah.
just sort of think we'll be having the same conversation, be a bit like deja vu. The market seemed to sort of like not want to listen to reason at the moment. So let me jump into FTSE. I'm going to go against the grain. The FTSE market, as Joe mentioned, very well supported by oil companies and prices. So maybe this is the one that might continue to show a little bit of promise to the upside. I just feel so wrong, Joe. So on the I just can't do it. I don't think I can bring myself to do it. I'm just looking at the DAX and I'm thinking, sell it. Looking at FTSE, thinking, okay, don't sell it, but maybe not as aggressively. So is it just wrong? Are we getting too sucked into this like hourly time frame? Let's take a look at the 4-hour chart. If you've got anything, Joe, obviously just take controls. But
all right, I'm going to go for cable. So this is a little range I've spotted on the hourly. I think it looks pretty negative on the. Well, it does, but then it's holding these support levels, and as I just sort of contradicting myself, saying how choppy this has been. I mean, look at the size of the ranges. So I'm basically looking to try and play in this little range here. We're at the top end of it. I've got a gun to my head, so I flicked through the hourly charts, and this is one that stood out for me. So I'm going to sell it at 133.77 with a stop loss at 134.21 and a target at 132.72. Looking for 2.42R on that one today. It's just the zoomed in version. So this was all the chop that we spoke about on the daily. Zoomed in on the hourly. We've got a low down here to target, and that's what I'm going to do. Stop loss is above the high that we posted at 7 o'clock this morning. If you are looking to follow this, probably the safest stop is above these highs here, but that means my risk reward isn't as favorable, so I'm going to go for that instead. Did that give you enough time, Steve?
Nowhere near enough time, mate. No,
Oh,
I
you didn't
I
even
really
move,
can't.
did you? You just
No,
paralysed
I
there.
did. Yeah, I was like rabbit in a headlight type thing. No, I can't pick anything, Joe. This is like very, very poor. When I can't pick anything, I like to sort of like dive into cryptos and sell that to get people excited, but it doesn't seem to excite anyone anymore. No, it's despite everything, it's telling me this is a bad idea, but I'm going to go for it. I'm going to buy FTSE. Can I buy FTSE and sell DAX? That's what I'd like to do.
There's 2 trades then.
Okay, well, it's a gun to my head, so I'm desperate. So here we go. Buying FTSE at 7,406 or something. Let me see. We've got to give it a little bit of room. Or do we? Let's have a 25 tick stop. Really
Well, it's
tight
going to be
stop.
the end of the day soon, Steve, so you need to hurry up and make a decision. This gun is...
There we are. It's a 4-to-1 risk reward. We're buying it here. We're stopping just below the support of the Ichimoku cloud. Really like trying to buy into this knife that's falling at the moment. Yeah, let's go a little bit more punchy. 6-to-1 risk reward, Joe. I'm going to target a move back up to these highs that we saw on the 25th of Feb last Friday.
Cool. Good luck, mate. Okay, so we've got the latest news scrolling across the bottom, but for those that haven't seen it, we've got some data due out today. We've got 1:30 UK time US jobless claims. Again, a bit of a reading ahead of tomorrow's non-farm payroll number. And also we have today US ISM non-manufacturing index numbers, which are due out at 3 o'clock UK time. So just a couple of bits. I believe there's also some central bank speakers today that we need to be mindful of as well. So yeah, just be careful out there. More volatility is expected. Anything else from you, Steve, at all?
No, all good for me.
Lovely stuff. Okay, have a great day, everybody, and we will be back tomorrow morning on Non-Farm
Brilliant.
Friday.
Cheers.
Bye.